Hello everyone, this is Peter and welcome to another episode of News Plus brought to you from Plus Agency. News Plus is a program to summarize what has happened in Sydney real estate in the past week. If you're interested in this type of content, please make sure to subscribe to our channel, forward to your friend, and let them understand what is really happening in Sydney, especially real estate. Plus Agency is a boutique agency. We're located in the heart of Chatswood, 418 Victoria Avenue. If you're interested in deals in North Shore, interested deals in CBD or surrounding areas, please make sure to pay us a visit. We are very professionalized in these particular areas, and we are more than happy to approach you to some of the best offers you can find in the Sydney market, especially in terms of apartments, high-end luxury houses and townhouses. All right, with no further ado, let's get this week's News Plus started. First article, Sydney's explosion in $4 million and $3 million suburbs. Price hit new extremes in already pricey market. Paying more than $3 million for a house has become the norm in nearly 1 in 8 Sydney suburbs, and there are 29 suburbs where price typically exceeds $4 million already. There are incredible 39 suburbs with median house prices well over $3 million at the start of 2021, but the number has more than doubled to 82 suburbs by year end. The bounty of price areas include 29 suburbs where the median house prices were over $4 million, according to CoreLogic data provided exclusively to the Daily Telegraph. The majority of the areas are actually in the North Shore and the eastern suburb. People who bought them 10 years ago has made dramatically gains from it, and especially in the past 2 years when COVID first hit around February, March in 2020, prices has come down a bit because everyone was panicking about the pandemic, and then after that the prices start to shoot off through the roof. A lot of people are a little bit concerned about the price rises. A lot of people want to live here. A lot of the areas, you got tram, university, everything's super easy, but with that comes in a very handy prices. Cremorne, before houses maybe at mid 2 to 3, and now selling when a very average house are being sold for $4 million or $4 million plus easily. Paying more than $3 million for the average house in suburbs remains rare outside of Sydney. So if you are living in Melbourne or any of the other areas of Australia, you probably wouldn't see this. So Sydney is very, very, very special in this case. Toorak was the only area that actually had a median prices over $4 million outside of Sydney, and then the Perth has one area that actually have a median prices over $3 million, and none of the other state or any of the other area has such. So suburbs including Killara, Lynfield have recently just raised up into the map. North Willoughby, Chatswood, Narrabeen, in the western area you see Strathfield on the book. In northern beaches, Bayview, all these things are started coming out of price rising zone. Suburb with medium house prices of $4 million plus, almost all of them are actually in Sydney. You see the usual suspect like Bondi Beach, Vaucluse, Double Bay, Bellevue, Point Pepper, but you also see some newcomers like Fairlight and Roseville Chase. We see what it is going to happen this year, and hopefully the house prices wouldn't rise as much as it has in the past year, but it really just depends on the market. Alright, next one. Seller gamble profits by selling off market. There's a lot of debate about whether we should sell off the market or on the market, and majority of the time we sell off the market because you don't want to leave a record that of this property has been listed on the market before. However, common compromise is that on the repelled fund, off-market listing sold for 2.7% less in Sydney during the year of 2019 and 2020 period. This equals to a loss of more than $30,000 on average per property. I know selling off the market can be very easy. Obviously a lot of people are trying to not spend that marketing budget, but majority of the time it's not the case. I think you just don't want to go out there doing the whole thing. It's just very exhausting process for the vendor and for the agent as well. A lot of people just want to see what they can get for the market, but unfortunately a sample was given. There was one agent in Rewrite has recently sold a property in Sydney's Glenwood for $1.26 million within 1 week of advertising Before that, they were trying to do this off the market and only attract offers below 1.15 million. So it's quite a bit of a difference because of the lack of competition and the feeling of just not enough fear of loss. In this particular cases, when it was sold off the market, that's why you normally couldn't get what you want. So for anyone now who actually is thinking about selling, I think doing the extra thing to get it on top of it and get it onto the market is actually quite important. Alright, next one, Bankstown. Bankstown has recently got a very good record that was produced. A value has existed, whatever that's been sold in the Western Sydney in the past 5 years. And this is a magnificent sale. It's a 42 units in one line, sold across 4 apartment blocks in Bankstown to a community housing provider. The deal is 16.989 million. This is the latest deal to tackle an increasingly unaffordable housing crisis by increasing supply for the comparative cheaper build-to-rent accommodation. This could be the developer and this could be a long-term just build-to-rent sort of scheme. At the moment, the buyer who actually bought it does not want to build anything yet. They want to hold on to it, utilize the rent, which is almost $800,000 a year across these properties altogether, and this is one of the largest apartment blocks sold in Western Sydney over the past 5 years. Potentially, if possible, I think there will be more deals like this coming up, and then it's just a good sign that people are really backing a lot of good asset and then aiming for the long-term run in these special times. Alright, how much money does people actually make last year by selling the properties? Here is the figure. $500,000 average profit, where home sellers make a killing of Sydney housing boom. Homeowners in parts of Sydney pocketed more than $500,000 profit of their property sale last year thanks to the once-in-a-generation housing boom. It is. Data showed 95.7% of sellers resold their home for more than what they bought them for, with the average difference or profit varying between regions. Some of the good regions are the regions with a beautiful lifestyle, such as beach regions or all areas with heritage, which means if you have a land or a regional area that's got a big area that you can use as farmland as well, this is something that's really attracting a lot of people. For example, Northern Beaches, where the average seller who traded home in the September quarter, the latest with available data, pocketed $566,775. Sutherland Shine has also made a similar gain, pocketing about $524,000 in resale value on average. The average increment in prices across Sydney is $270,000, but Hornsby Hill District has smashed it by a very, very far margin. Hornsby almost doubled it, Woollahra Council doubled it as well, Waverley Council doubled it. Hill District has got a whopping $715,000 capital gain compared to what they bought for, and that puts the Hill area right on top of everything, going down to a full list, the most profitable LGA for sellers. The Hills, and this is by median resale profit, at $715,000, Woollahra at $590,000, Northern Beaches, like we said, $566,775, Sutherland Shines $524,000, Hornsby $520,000, Waverley $520,000, in the West almost $500,000, Waverley $495,000, North Sydney $470,000, Blue Mountain even $470,000, Randwick $442,000. So these are the areas that's actually got most capital gain or profit compared to what they originally bought for, and the average length of people holding on to their property is between 7 to 8 years. That means property market is not a quick in, quick out scheme. You need to wait, have the patience, and your patience and good location will pay off in the end. Alright, last article of this week, most undervalued unit markets. Sydney suburbs where buyers can get more bang for their buck. We all know that there has been a historical big gap between the apartment prices and the house prices already, and that gap has increased to almost 3 apartments for 1 house in some of the area, which is absolutely insane. The house prices has surged for 25%. Unit prices has not been catching up yet. that caused them become an undervalued performing section. And then now let's take a look at why is that happening and where this is going to lead to us. Many of the suburbs near Parramatta or other emerging business hubs such as Macquarie Business Park in the northwest are in this type of situation. Suburbs with the slowest growth in prices last year was May Hills near Parramatta, where unit value crept up to only 1% across the whole year, according to CoreLogic data, but no suburb recorded price drops, which means lucky enough there was no price drop. Suburb with less than 3% growth in median unit prices, including areas like Westmead, Harris Park, and Rose Hill, along with northwest suburb Epping. Rockdale, Kogarah, Bexley in the St. George region has also minimal growth in the unit prices. By contrast, house prices rise in Sydney's top growth suburb last year hit more than 45%, with some median prices blooming by more than $1 million. The apartment prices underperformed relatively to a house last year because the buyers were trying to get additional space and they're really prioritizing their space rather than the distance now and convenience due to COVID pandemic. Investors who normally accounted for large shares of demand for units also avoid the apartment market last year because closed international borders means there's just fewer tenants and rent drops. Areas like Sydney CBD or Macquarie Park has received some significant rent drops. However, absence of overseas migrants affect areas like Parramatta, and once the changes, there is more migration. Some unit markets may see catch up. It's a bit of an unknown at this stage because of Omicron. However, in the long run, let's put it in the long perspective, the unit prices and the rent prices will definitely have to play a catch up just because of the nature of it. In the long run, there are still very desirable areas cited by the CoreLogic head of research, Lisa Owen. Liverpool CBD has also been terrible performed, unfortunately, and then remain Sydney's cheapest suburbs to buy a home. The median prices of $425,000, and local agent McGrath's Liverpool director Glenn said buyers could get a 10-year-old 3-bedroom unit for only $500,000. Price still grow, it's just not the 20% rises that we're gonna see last year compared to the houses. And then I think the unit prices are really going to compare to last year, start to do a little bit of a catch up. Otherwise, it's just not making sense, and then now these properties are giving an incredibly value. All right, let's go back to what listings that we have. This week we've got a beautiful property, 3-bedroom, 2-bathroom in the Sydney CBD, exactly the type of undervalued property we just mentioned about. This one is beautiful, located in the Day Street, roughly only about 34 minutes walk to Darling Harbour, right on the water, even though it doesn't have water view, but the convenience of how close it is to the park and to the water, and how convenient it is to walk to all the proximities and taking advantage of the convenience of city has definitely put it into one of the most livable locations in Sydney. But the prices has only been $1.8 million to $2 million in price guide, and we're gonna get an auction and starting in about 4 weeks time and see where the market take us. If you are looking for that treasure, that property you think you should get in the previous prices, but you just missed out because you wasn't making decision quick enough, this is another absolutely good chance for you to step in and get it done in the best way possible. All right, that's it for this week's News Plus. Thank you so much for tuning in. This is Peter Lee. I will see you next week. Thank you.